Okay, everyone, so I've had some questions being posted on the discussion board about how to do the journal entry to clear out the over or under applied overhead, like what percentages. So it's discussed on page 161, and actually, let me go to 161 here, just hold on. Where's C? 159, okay, I'm close. 61. Okay. This is where I want to be, right here. So you allocate the under or over applied, well, the over applied overhead based on where it would have been otherwise. So basically what you're going to do here is, so for the example that they had given, this amount, this is given to you here somewhere in the question. So work in process had 30,000, finished goods had 15, and cost of goods sold had 45 for a total of 90,000. So then you take the percentage, so 30,000 divided by 90,000, so that is 1/3. 15,000 divided by 90,000 is 16.67%, and 45,000 divided by 90,000 is 50%. So then you use these percentages. So it was over applied, I think, by $5,000. So from that $5,000, then you take 33.33% of that and apply it to the work in process. You take 16.667% of that, of the $5,000, to finished goods, and you take 50% to cost of goods sold. Because if you had been applying it correctly, if you had had the correct numbers all year, that's where it would have went. So that's how you get your percentages. So let's take a quick look now. Oh, too far. Oh, okay. This is kind of got a mind of its own here today. Let me get down to the problems. So if we take a quick look at problem 28 in your text. Now 28 is long. I'm not going to do the whole thing, but I'm just going to do another example. 26, there we go. 28. Okay, so in question 28, so first you're asked to prepare journal entries for all the entries above here. Then you're asked to put the amounts into T accounts. You're going to prepare cost of goods sold, schedule of goods manufactured. Then you're going to do a journal entry to dispose of any balance. So we're going to come here. So the first thing you have to do again is how much is in each of these accounts. So work in process, finished goods. So if we go up to our T accounts, somewhere, yeah, work in process 56,000, finished goods 30,000. So if we go look, 5630, cost of goods sold, that should be in a T. Oh, here we go, 800,000. And then right in the book, it shows us right here the beginning balances. So work in process 21, finished goods 60. So if I go back, 21 and 60. So cost of goods sold was 719,000 that period. Okay, so now, so we just, all you have to do here is just go get the numbers. You know, so depending on the question, you might be given the numbers outright. You might have to calculate them. You might have to do what we do here and, you know, just grab them from the T accounts from above. So you add those together, it's 805,000. So now what portion is work in process of the total? It's 7%, 56,000 divided by 805,000. What portion is finished goods? So to 30,000 divided by 805,000. So finished goods makes up 4%. And cost of goods sold, 719 divided by 805 is 89%. So now we know of the total, 7% belongs to work in process, finished goods 4%, and 89% cost of goods sold. So now we take, and just so happens it's 5,000 here again, so there was a $5,000 balance in the manufacturing overhead. So now we use these percentages. 7% of that 5,000 should be allocated to work in process, 4% of the 5,000 should be allocated to finished goods according to this, and 89% of the 5,000 should go to cost of goods sold. So that's how you calculate your percentages. So in a nutshell, find out your total in each of those three categories. How much do each of those then make up of the total? And then you use that percentage and multiply it by the amount remaining in your manufacturing overhead and allocate it out based on those percentages.